Right. So also what was passed was the Social Security Fairness Act. And I talked about this act, but it passed. It got 100% of the Democratic votes in the Senate. It had already passed the House. So now it's done. But 27 Republicans voted in favor of it. Okay? So if 27 Republicans were willing to blow up the debt even more by increasing Social Security benefits. See, Social Security is already insolvent, right? Social Security right now is paying out more in benefits than it collects in taxes. And not only are they not reducing benefits, they're actually expanding them. The Fairness Act increases benefits for people who work for government, local governments, teachers, firemen, who they get a pension, but they also get Social Security. There's some rule that reduces the amount of Social Security benefits they receive. And I'm not even sure how it all works, but as a result of this Fairness Act, these people are going to get more Social Security benefits going forward than they were getting in the past. And people who weren't, collecting yet, when they do retire, because of this, they're going to get more money than was otherwise budgeted. So the deficit is going to go up. I think the number I read was maybe 20 billion a year. I'm sure that's way low, right? Every time the government estimates what something's going to cost, it's always much lower. The estimate is much lower than it ends up being. So if the government says this is going to cost us 20 billion a year, it's probably 50 to 100 billion a year, right? But I mean, who cares, right? Because the deficit is so big at this point that, tens of billions here, tens of billions here, right? But the point is, we're heading in the wrong direction. And if these Republicans couldn't stand up against this increased spending bill, what luck is the Doge fake committee going to have in persuading an even fewer number of senators, which would be needed? I mean, it's going to be a great. They need all of them, and so they're not even going to come close to getting any spending reductions. Spending is going up, and that's why bond yields are going up, and it's ultimately, why the dollar is going to go down. I mean, the dollar has been strengthening, and one of the main arguments that I'm hearing to explain the strength of the dollar is the tariffs that are coming. We're going to get these tariffs. Well, we got tariffs when Trump was president the first time, and the dollar sold off after it initially rallied when he first won. His second year in office, the dollar, had a pretty big down year. I mean, so the dollar didn't make a lot of gains based on the first tariffs. But the idea that the tariffs are going to hurt the economies of our trading partners, that Mexico, Canada, they're all going to suffer from these tariffs. And so their currencies can go down. That's wrong. America is going to suffer more from the tariffs than any of our trading partners. I mean, our trading partners are going to be fine. Their sales to the United States aren't going to go to zero. Yes, their sales might go down. Maybe they'll go down 10 or 20%. I don't know. But they're going to get full price for the rest of their merchandise. And the stuff they don't sell to Americans, they'll just sell to the next highest bidder. Maybe that'll be China. Maybe, who knows? Maybe they'll consume themselves. But the fact of the matter is, the countries that are producing, they're in the driver's seat. If they don't sell to us, they'll sell to somebody else. They'll consume themselves. And what they lose is minimal, but what they lose, somebody else gains. Somebody in Canada, somebody in China will get to buy something that they previously couldn't afford because the American paid more. But because the American can't pay more because he has to pay a tariff on top and he got priced out of the market, that benefited the next highest bidder. It's the Americans who are going to have to figure out how to get by without the stuff that they can no longer afford. To the extent that there's some American substitute that's not as good, that's cheaper than the price of the import with the tariff, but that's obviously more expensive than what the import was without the tariff, well, then that'll be bought. But that's going to hurt the American economy, because if everybody has to pay more for imports who buys imports, there's less money left over to spend on other things. And so whoever's supplying those other things, whether they're goods or services, is going to suffer. So this knee-jerk reaction is wrong. And in fact, I think to the extent that we piss off more people with tariffs and we make the U.S. market less viable for the rest of the world, that's another reason to move away from the dollar. That's another reason to stop supporting the dollar. So I think that these tariffs are not going to be good for the dollar. What's going to be bad for the dollar is going to be our rising budget deficits and our rising trade deficits. In fact, we got the merchandise trade deficit came out today. And it was supposed to shrink a little bit. This is the November number. It was supposed to shrink from 99.1 billion. Well, actually, it was supposed to grow. They were looking for 101 billion. Instead, we got 102.9 billion. That's a decent jump. That's only the fourth time in the history of America that we've had a merchandise deficit, a goods deficit in 1 month above 100 billion. The first two times that happened was in early 2022. And that was when the U.S. economy was just reopened from COVID. And we had all this backlog of goods that were sitting on the docks, but they couldn't come in because nobody was working. And so those were outliers. Those weren't real because there was all this pent up stuff. So we had smaller deficits for a few months and then, had a big rush of stuff coming in. But outside of COVID, the first time we had a deficit over 100 billion was 3 months ago. And now it just happened again. So 2 out of the last 3 months, we've had $100 billion plus goods deficits. So now they're no longer outliers. This is business as usual. This is where the bar has been reset. And these deficits are going to go up, even with the tariffs. The tariffs may reduce it somewhat, but I think there's a lot of upward momentum that you're still going to see larger trade deficits, even with the tariffs. Now, somebody when I posted something about this on X, somebody kind of tried to take me to task for blowing this out of proportion because he said that, well, as a percentage of GDP, the trade deficits are no bigger now than they were in 1985. Well, that's not true. I went back and checked, and the trade deficit, goods deficit in 1985 was 3.4% of GDP. The deficit we have right now is 4.6% of GDP. So it's much bigger. But I agree that we had a big trade deficit in 1985. That was a problem. We had a big trade deficit, growing trade deficit under Ronald Reagan. The trade deficit grew dramatically from 1981, when I think it was under 20 billion, to over 50 billion or 100 billion by 1985. I mean, it really was blowing out of control. In fact, we had small deficits in the late 1970s. Up until 1975, we had surpluses. So the first year we ever had a trade deficit was 1976. And then the trade deficits were growing slowly until Reagan. And then, we had these tax cuts and Americans had a lot more cash and the dollar had been strong and Americans were going on a global shopping spree and our trade deficit started to blow up. That was not, that did not go unnoticed in the markets though. I mean, maybe that's something that this guy didn't realize. But so in 1987, January of 1987, the yield on the U.S. Treasury was about 10-year Treasury was about 7%. Right now, now I just said we're still below 5, we're like 4.6, right? But they were at 7. But because of the trade deficits that were growing throughout 1987, and they were growing in 86, right? They had been continuing to get bigger and bigger. They were putting upward pressure on bond yields. The 10-year Treasury by the summer of 1987 or early was up at 10%. So we had a huge move, and the dollar was getting killed. The dollar was falling as bond yields were rising. And the driving factor were these trade deficits that people were worried about. They were worried about the trade deficit in 1985, even though they're not worried about it now. And it's much bigger as a percentage of GDP now than it was then. At least back then, people were worried. And by 1987, they were really worried. And that is really what the catalyst was for the 1987 stock market crash, when the Dow dropped 500 points in one day, which, back then was a big deal. I mean, today we were down 500 and you don't even know. 500 in 1987 was like 20% of the value of the Dow, because the Dow was, 2000 and something back then. But the trade deficit was so problematic. The markets were so worried about the trade deficit and the rising trade deficit that the bond market was tanking, the dollar was tanking, and then the stock market crashed.